So something pretty huge is happening in the world of money, right here in the UK. The Bank of England is gearing up for a brand new digital age, and right at the heart of it is this powerful new idea called the stablecoin. Today, we're going to break down what this could mean for, well, for everyone. But look, before we get buried in all the rules and regulations, let's just start with a wild question. What if your favorite airline or that coffee shop you go to every morning could just issue its own digital cash? I know, it sounds like something straight out of science fiction, right? But it's actually a lot closer than you might think, and it's the key to understanding why all of this is happening right now. Okay, so let's get into it. The UK is actively getting ready for a future where brand new types of digital money are going to exist right alongside the pounds you have in your bank account. The whole idea is to give us, the public, more choice, while making absolutely sure the entire system stays safe and trustworthy.
And the star of this show is the stablecoin. Now, unlike a lot of other crypto assets that can be, incredibly volatile, a stablecoin is built to do exactly what its name says, stay stable. And it does this by being pegged one-to-one with a real-world currency, like the British pound. So you can think of it as a digital token that's pretty much always worth exactly £1. Simple as that.
And this is not just some idea being kicked around. Nope, the Bank of England is already writing the rulebook. They've actually published a formal proposal to regulate what they're calling systemic stablecoins. All that means is coins that could become so widely used for everyday stuff, like buying groceries, that they become essential to the UK's whole financial system. So here's the billion-pound question, right? How do you make sure this new kind of money is actually safe to use? Let's take a look at the specific safety rules the Bank of England is cooking up to build public trust right from the very beginning. The plan really has three core parts to it. First, every single digital pound has to be backed by ultra-safe assets. We're talking cash sitting in the Bank of England itself and short-term government debt. Second, to stop a sudden rush out of traditional banks, they're planning temporary limits on how much any one person can hold. And third, the Bank of England is going to team up with the Financial Conduct Authority to police the whole system. And to put a real number on that, the temporary limit they're proposing for individuals is £20,000 per stablecoin. Now, this is a really crucial safety net. It's designed to make sure the existing financial system can adapt smoothly as this new money gets introduced without, causing any chaos or instability.
And this quote really gets to the heart of what the bank is trying to do. As the Deputy Governor, Sarah Breeden, puts it, the goal here is to give the industry a clear, confident path forward so they can innovate safely. It's about opening the door to a new future for payments, not slamming it shut.
So, with these new rules coming into place, what problems could this new money actually solve? Well, to get that, we need to look at something you probably have in your wallet right now, a co-branded credit card. And it turns out that whole model is, it's fundamentally broken for a lot of brands. You know the ones, airline cards, hotel rewards cards. For the huge brands, they're insanely profitable loyalty programs. But every single one of them depends on a partnership with a bank. And that creates this fundamental, kind of hidden conflict that affects everyone, from small businesses all the way up to the biggest names in tech. And let's look at a pretty famous example of when this whole thing just went completely wrong. Remember when Apple, one of the most powerful brands on the planet, launched its credit card with Goldman Sachs? On paper, it seemed like a perfect match. In reality, it turned into a total public relations nightmare. What's so fascinating here is how Apple just completely lost control of its own product. When the bank's algorithm was accused of being sexist, the headlines didn't say Goldman Sachs' card is sexist, they said Apple's card was. When customer service couldn't explain decisions, that became Apple's black box problem. The bank's financial troubles ended up causing massive brand damage directly for Apple. So the whole thing really boils down to this. The brand, right? They want to say yes to every single loyal customer. But the bank, to stay in business, has to manage its own risk, and that means saying no to some of them. It's just a fundamental misalignment. The brand gets the revenue, maybe, but it gives up all control over its relationship with its own customers. So how do you solve this puzzle? Well, this is where stablecoins, powered by these new UK regulations, jump back into the picture. They make a completely new kind of financial product possible. You could almost call it a stablecoin supercard. And the idea is actually incredibly simple. Instead of having to apply for credit from a bank, a customer just pre-funds their own digital wallet with stablecoins. Then, when they tap their card to pay, the merchant gets paid in normal pounds, and the stablecoins are just deducted from the customer's wallet. Think of it like a prepaid card, but on a whole other level. For the brand, this model completely flips the script. They get total control back. There's no more black box algorithm rejecting their customers. Those swipe fees can become revenue instead of just a cost. And they can even offer really innovative rewards funded by the interest earned on the stablecoins. The brand finally owns the relationship again.
This table really lays out the trade-offs perfectly. Look, the traditional model, it's mature, it's been around forever, but brands give up control. The stablecoin model offers that control back and better economics, but the whole ecosystem is still pretty new. The Bank of England's rules are basically designed to help this new system grow up, safely and quickly.
But of course, this new tech isn't magic. With new possibilities come new risks. And if brands are seriously going to jump on this, they need a way to handle the unique challenges of a world that's built on digital wallets and blockchains. The good news is, brands don't have to become crypto experts to do this. There's a whole new industry of specialist companies popping up to do the heavy lifting. As you can see here, you've got firms that will manage all the technical stuff to keep funds secure, provide simple wallet-as-a-service apps for customers, and even wrap the entire thing up in a fully compliant regulatory package. It's becoming a plug-and-play solution. So, as the UK stands right on the edge of this new money revolution, it leaves us with one last really fascinating question. Does this technology, all regulated by the Bank of England, unlock a new era of control and choice for both consumers and brands? Or are we just building a new kind of system with its own traps we can't even see yet? I guess the next few years are going to tell the story.